Hello, my name is Madison Seeley, and I'm going to talk about my project and what I learned. So, my first investment was Verizon, and one reason that I chose this investment in my portfolio is because they are a huge company. They are the largest U.S. wireless communication service provider. And over the course of the semester, the stock did not do very well. It actually decreased by $5. I would have chosen to sell off the stock when it first started decreasing, and I realized that it had an unfavorable cash to debt ratio. Next is Macy's, and I chose this stock because Macy's is a huge department store and it creates a lot of revenue in the United States. The stock dipped down and then spiked back up during the semester, and I would have chosen to sell it off in early March because I realized that the stock was underperforming the S&P 500 and their fourth quarter earnings were very low. So I would have earned over $1 return from the stock, but overall it dipped. Next is Wells Fargo, and I chose this stock because it is a leading banking and financial services company, and I thought that it could make some profit. So overall, the stock dipped about $3. I sold it off when a scandal took place that got it a lot of bad press. My next three are Yahoo, Amazon, and Discovery Communications, and I picked these stocks because they are big and growing companies. I was correct in my assumptions, and all three of them increased drastically. The next stock is Hanes Brands Incorporated, and I chose this stock because it is international and it was a stock that was selling at a lower price than some of the others in my portfolio. But this stock took a huge dip in early February. It eventually came back up some, and I experienced a loss of less than $1. Next is Chesapeake Energy Corporation, and I thought that this company might start to rise because of the downturn that they had been in, but overall the stock fell, not by much. I would have sold it off before it took the major dip and mitigated my losses, and this was because of their weak balance sheet. My last two are Index Fund S&P Equal Weight No Load Shares and Vanguard Total Market Index Fund Investor Shares. And overall, the stock market has been on the rise for a while now, and I thought that by acquiring funds that mimic an index, there would be a chance to get a decent return. And my assumptions were correct, and the index increased throughout the semester, and I believe that it was a good buy. So overall, my portfolio was not as successful as I had hoped. I learned that even though a company might be big and well known, it does not necessarily mean that their stock is just as great as you may believe. I learned that index stocks can do well if the market is rising, and if I could change anything, I would have invested more in bonds and other instruments instead of mainly in stocks. Thank you.